Welcome back. Recently, the Financial Reporting Council of Nigeria released some guidelines to external auditors and directors of public and private companies in respect of their financial statements reporting. The partner and head of assurance with Ernst & Young Nigeria, Mr. Jamiu Olakiso, joins us here in the studio to help us make a sense of these guidelines. Good morning, and thanks for coming on the program.
Thank you. Good morning.
So tell us, what has changed with these guidelines from the FRC on COVID-19 risks?
Okay, thank you, BC. The FRC actually issued two different guidelines. The first one was issued on 6th of April, and that was actually addressed to the external auditors of companies. And the second one was issued almost 2 weeks after, and that was 22nd of April, this same month, and that was actually addressed to the preparers of financial statements. And when you look at what has changed, there's actually nothing new in the two guidelines. What FRC basically is trying to do is to remind both the auditors and the preparers of financial statements of their responsibilities. Responsibilities as highlighted both in the accounting standard that we use in Nigeria, which is International Financial Reporting Standards, as well as the auditing standard for auditor, which is what we call ISA, International Standards on Auditing. So in actual sense, those things that are included in the guideline, they are not really new, and they are just reminding both the auditors and the preparers to actually ensure that they live up to expectation.
But what's the difference between these two guidelines?
Okay, thank you. The first guideline that was issued on 6th of April, like I said, that was addressed to the external auditors. And that first one looked at a number of things. Although in the two guidelines, there are quite a number of things that are common. But if I'm going to focus first on the first one, which was issued on 6th of April, it includes quite a number of things. One of the things it talks about is when you are trying to assess the impact of COVID-19 on financial statement of entities, entities have been classified into three for this purpose. Or let me say the financial statements of these entities have been classified into three. The first one is for those entities that have the year end of 31 December 2019. For those kind of entities, if at the time the guideline was issued in April 6th April, if as at the time that guideline was issued, the financial statement audit has been finalized, the audit report has been issued, and the report has been sent to the shareholders, so it will not have impact. Then the second category is for those entities that have the year end of 31 December 2019, but at the time the guideline was issued, the audit exercise is still ongoing. So for those kind of entities, there will be an impact. And what kind of impact? The impact the guideline reminds us of is the fact that there is an accounting standard called IAS 10. IAS 10 is events after the reporting period. So paragraph 21 of that standard talks about the disclosures you need to make in your financial statement when you have events that take place after the end of the reporting period. But when you consider those events to be material, you need to make certain disclosures in your financial statements. And one of the disclosures you need to make is, one, the nature of the event, and the second one is the impact, the estimate of the impact. But if the impact cannot be quantified, then you need to make a statement to that effect that the impact could not be quantified. Then the third category are those companies that have the year end of after 1st January 2020. And for those type of entities, one needs to be a bit careful here. One year end that many people actually pay attention to is 31 March 2020. For entities with that type of year end, definitely COVID-19 is no longer an event after reporting period. And why is that the case? The World Health Organization on 30th of January 2020 declared COVID-19 as public health emergency of international concern. And in Nigeria, Nigeria recorded its first case on 27th of February. And again, by 11th of March, the same World Health Organization declared COVID-19 as a pandemic. So all those events already took place before the end of 31st March. So definitely if your year end is 31st March, you are affected. And in that situation, it's no longer an event after reporting period. The expectation is in the assets, in the liabilities that are included in the financial statement, the impact should have been reflected.
Now, with all this now, do shareholders have any reason to be worried?
Actually, if you look at, it depends on what you are looking at. COVID-19, yes, the shareholders need to be worried because we've seen that there is a lockdown, for instance, in Nigeria. This is the 5th week. So definitely this thing is having impact on businesses, not only in Nigeria, but across the globe. But if you look at the two guidelines that have been issued by the Financial Reporting Council, I see no reason why shareholders need to be worried because what the guideline contain, they are not different from those things that are already contained in the accounting standards and the auditing standard that we follow.
Now, looking at the guidelines now, they concern the audit of 2019 financial statements that have been completed and some that are ongoing, just as you mentioned. But are there companies or sectors that are likely to be affected?
When you look at COVID-19, we have impact on virtually all entities. The impact will differ from one entity to another. Of course, when you look at the aviation sector, for instance, that sector is badly affected because globally not many airlines are operating. You look at the tourism sector is equally affected. You look at the hospitality industry is equally affected. You look at other sectors, they're equally affected. Virtually all businesses in Lagos have been shut down in the last 4 weeks or thereabouts. But some are still operating. And because they are still operating, so the effect might not be as much as on other entities. But like I've said earlier, what is affecting entities is not actually the two guidelines issued by FRC. It's actually the COVID-19 itself, which is having direct and indirect impact on businesses.
But we've seen some companies release their statements. What have they done differently?
There's nothing they've done differently. It depends on the statement you are talking about. Are you looking at the year ended 31 December 2019? If that is what you are looking at, don't forget that as at that time, Nigeria has not even recorded any case. And even globally, just like I've mentioned before, that event, the expectation is that it did not have as much impact in the year that ended on 31 December 2019 compared with what we are going to see in this current financial year. So in actual sense, you can't say they've done anything differently because you might not be able to see the impact in the financial statements they've released so far.
Now, in the guidelines of the companies now, the FRC requests that the preparers, chief financial officers, of course, in this case, to disclose their principal risk and uncertainties that the companies may have faced due to the COVID-19 pandemic. What are some of these likely events?
Okay, so in actual sense, when something like this happens, one of the things we need to assess is the impact on that entity. And in assessing the impact, for instance, in Nigeria, the directors are responsible for the preparation of the financial statement. Although the CFO, they normally help the directors to achieve that responsibility. Now, the directors must assess whether the entity in question is a going concern based on the impact of COVID-19 on that entity. And in doing that assessment, if the assessment is done by the directors, of course, the CFO will help the directors to do the assessment. The auditor who is equally coming to perform the audit needs to take the assessment from the directors and confirm whether the assessment is okay. So, yes, COVID-19 is here with us, but that does not necessarily mean that some companies will die. So the financial statements could still be prepared on a going concern basis. But one thing the accounting standard tells us is, if based on the assessment that the management, that is the directors, have done, they believe that this entity is not likely to be a going concern, then the financial statements should be prepared using alternative basis. So the assessment that the CFOs need to do based on the guideline by FRC is to actually assist the users of the financial statement to know the impact of this risk on that entity.
What are your expectations in terms of compliance?
For me, compliance with the guidelines issued by FRC is something I expect the compliance level to be high, simply because many people are already aware of this before. Aside from what FRC has issued, we have the Institute of Chartered Accountants of Nigeria that has equally issued a kind of circular to the practitioners for them to be aware of, for them to take cognizance of many of those things that are contained in FRC guideline. So for me, I do not expect that auditors and preparers of financial statements will not comply. I expect them to actually comply because nothing new in actual sense in what FRC has issued.
That would be a good point to leave the conversation. Partner and Head of Assurance with Ernst & Young Nigeria, Mr. Jamiu Olakison. Thanks for coming on the program.
Thank you.